What is up, you guys? Nick here. And before we start today, I just want to thank each and every single one of you for liking, commenting, watching my videos, subscribing to my videos. I really appreciate it. I recently hit 10,000 subscribers and I could not thank you guys enough. Thank you so much for your continued support. I love discussing and talking stocks in the comments with you guys, especially my favorite stocks and especially NIO. Anyways, enough blabber. I'll stop it now. Thank you. All right, so getting to it, the big news, NIO's Q3 aftermath. If you watched my previous video and took my advice, you're probably jumping in joy right now. Wednesday the 18th, just like I thought it would, ended the day in red, at one point being down over 9%. I was not shocked about this in the least. So many investors are just running for the doors, fearing a broad market sell-off. However, this is not what we saw at all. Just like the sun rises in the east, the most predictable pop of NIO shares all time maybe today. Wow, a 7.52% day and up $3.39. So what caused this pop in share price? Can this be sustained? What are investors looking for heading into Q4 and 2021? And most importantly, should you buy, wait for a correction, sell, or hold? If you haven't already, hit that subscribe button. I do a ton of videos like this covering EV, tech, IPOs, and focusing my investment strategy on disruptor companies that are going to be well poised for the coming landscape. I know a lot about NIO and their inside workings. I first started investing in them at $3 a share and first told my subscribers to invest in them at $7 a share. You don't want to miss any of my future picks, so hit that subscribe button, smash that like button for the YouTube algorithm. If we know Lee Bin loves two things, EVs and a smashed like button. All right, without further ado, let's get right into it. All right, so 2 trading periods after NIO's Q3, and we are now back in overall positive delta, up over 4% since where they closed before the phenomenal earnings they released. Up 7.43% in just one day alone. I find it absolutely wild that here I am, over 6, 7, maybe 8 months later, still explaining just how crazy these one-day pops in NIO shares are and continue to be. So why did this happen? Well, an analyst from Deutsche Bank Securities by the name of Edison Yu, sweet name, raised his price target from $34 to $50. JP Morgan Nick Lay, from who you may remember in a previous video of mine, maintained his overweight rating and raised targets to $50. Credit Suisse, finally catching up to the real world, raised their price targets of their terrible bearish 25 to an extremely bullish 60. So what happened is that there were essentially people waiting for these analysts to come out with their new ratings to either then sell or buy additional shares. However, we can obviously see the overarching theme was bullish. There are 2 opposing factors at work on this current share price. On one hand, you have Citron Research Group kind of pulling it down. They're so bearish on the stock, they're really forcing it to the ground. However, you have all these new time analysts pulling it up, and clearly the bulls are winning this tug of war. A sign of weakness for investors was a lacking gross margin. And although they actually increased this margin to 12.9%, which is actually quite substantial, given that they are not a vertically integrated company and outsource virtually everything to JAC, many were indeed hoping for a figure closer to 14%. Going into some more numbers before their price prediction. Although their cost of revenue did in fact increase to $580.3 million in the quarter, representing a 15.7% from their Q2 increase, this was actually a pleasant surprise for me. They are claiming this increase is solely attributed to further delivery increases. NIO increased their delivery figure by 18.1493% from Q2. Therefore, you would be expecting a similar increase percentage-wise in terms of their cost of revenue. However, they were actually able to minimize this number down to 15.7%. These are the figures you want to see increasing and decreasing into the future coming quarters. Margins are absolutely everything in terms of a growth company, and the fact that they are already in double-digit margins is incredible to me. They are such a young startup electric vehicle Chinese growth company. Double-digit margins is a win. Moving on. I've been talking about their capacity issues and their supply strain for quite a while now. They have been increasing their delivery numbers without really being able to increase their capacity. This was a major concern for me. However, management has stated that by January, they will have increased their delivery capacity to 7,500 units per month. Although this capacity is far too close to their output right now, it is a step in the positive direction. However, they do need to increase this far more in the coming quarters. They have unfortunately run into capacity issues in the past, and it is the last thing I want them to run into the future. They have lost out on deliveries in the past due to increased demand and short supply and cap chain problems. Although a relatively good problem to have, NIO's business model, and albeit many auto sector models, are to have as many vehicles out on the road at any given time as possible. Vehicles are essentially just moving advertisements. The more out there, the more exponential growth you can see in the company. I've said it for months now, but people are realizing how special and unique these vehicles are. Up to 40% of all new NIOs sold on the market right now can be attributed to word of mouth coming from pre-existing users. Using this exact logic, the more deliveries NIO is able to accomplish per month, the more users they essentially get the next month in this exponentially growing snowball effect. Deutsche Bank is probably one of NIO's biggest cheerleaders right now and really understand the potential of this company. They are stating that NIO will be one of the biggest winners in the electric vehicle industry within China by the middle of the decade, 2025. They are stating that they are going to outperform the rest of the pack, and they are the must-have growth stock right now. This shot the share price up today. I am personally extremely heavily invested in ESG companies, especially since the Democratic Biden win in the United States. This will be huge for ESG within the next 4 years, and because of that, also NIO. The Bold Bank analyst goes on to state that they think by the year 2022, NIO's market share of electric vehicles in China will grow from the 2% it currently is to 9% of the market. This is immense. This is stating that they think they will be able to carve a market share out of Tesla's current domination within the EV sphere of China. This would make NIO an absolute powerhouse in the industry. Let's go back into their earnings report here for a second. Their cash and cash equivalents and total current assets are absolutely phenomenal. This was not the case last year, and I really remember that. I still think I have PTSD from those months. In December 2019, this company was virtually on the brink of bankruptcy with only 4.9 billion renminbi. However, less than 1 year later, September 30th, this company posted 19.3 billion renminbi in cash and cash equivalents and 26.3 billion renminbi in total current assets and 34.3 billion in non-current assets. Compared to 10.8 billion in total current liabilities, it is clear that this company will live to see the foreseeable future. Not having to worry about the short-term survival of this growth company is absolutely huge for mass investors. This company can now stronghold their position. They don't have to worry about share dilution in the near term at least, and they can allot more of their capital to further research and development, lowering their outsourcing and cost of revenue, developing further autonomous driving technology, allotting capital to new vehicles, and increasing their kilowattage per hour in their new battery pack cells. The company has recently allotted over $600 million USD into vehicle-to-vehicle communication, indicating that they do want to become an actual competitor in the autonomous driving sector. There are rumors of their 150 kilowatt per hour battery pack that they are trying to achieve. This would be incredible for their company, as their current new state-of-the-art high-grade battery is 100 kilowatt per hour, representing a range of 615 kilometers. Battery as a service continues to be a stronghold for this company. They recently rolled out this program for the company, and it has been a success. Successfully lowering the barrier to entry point, getting more people in on luxury vehicles that wouldn't necessarily be able to afford if they had to buy the battery outright. We're seeing a very nice increase in their other sales, which encapsulates battery as a service, accessories, and the NIO Power division. These sales accounted for 38.2 million, representing a 5.7% of total revenues. Remember, with more vehicles on the road, this division will continue to increase its importance and its share of total revenue. I really do see battery as a service and NIO Power doing absolutely huge things for this company in the coming quarters and years. They're steadily increasing their vehicle margins, which continue to be a shining light for this company. And surprisingly, a major source of their margin came from their ES8 Their oldest and largest vehicle, their SUV, this was done through declining battery costs and outsourcing costs, which are both expected to continue to decrease in the coming quarters. This will only make their margins better in the coming earnings calls. There are so many upsides to this company. And guys, remember, they're still a young company. They're only at $50 a share. Before Tesla's 5-to-1 stock split, they would be sitting at $2,500 per share. Compare this to NIO. They're sitting at $50 a share. Look at what an electric vehicle company can be. NIO is continuing to dominate. And there doesn't only have to be one company in this industry. It doesn't only have to be Tesla. There is a massive market share. And clearly investors and analysts are seeing this future potential of this company. Think long term here. Think 3, 5, 10 years down the road. This company could easily be into the 4 digits. And that's not an exaggeration. Analysts are saying by the year 2022, they could have almost 10% of electric vehicle sales in mainland China. This is the global epicenter of EV, and 10% represents a huge margin. If they are able to successfully realize the 7,500 capacity in January and output around 7,000 in January, I would not be surprised in the least to see the share price in triple digits by early next year. I will have a video dedicated to breaking down their share price, what I think it can be by the end of Q2 next year. Make sure you subscribe. You don't want to miss any of the content I'm releasing. I have really cool projects in the pipeline. You don't want to miss any of that. Hit the subscribe button, smash that like button for the YouTube algorithm. Thank you guys so much for 10,000 subscribers. I really do appreciate it. I really do value this community. Let me know of what you think about NIO in the comments. Are you buying, selling, holding, waiting for a correction? What are you doing? Let me know. Anyways, guys, thanks for watching. I'll see you in the next one. Cheers.